All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Also, really quick before we get started, due to increased demand and some recommendations, the price of my carnivore course and cycles course is going to increase shortly. So if you want to get in on that, you can see them right here on my website there. If you want to get in on that and lock in lifetime access, get your foot in the door now. Ask anybody who's taken them. They pay themselves off easily in one trade. So again, if you're on the fence, now is the time to get into that. Anyways, let's get into the markets here. So another kind of sell-off this week on the weekly time frame. Really, the catalyst obviously was the FOMC, Jerome Powell really kind of shooting down the original dovish language, and pretty good reversal there on that hourly candle, as you can see, and we closed the week lower. I told you guys last week that I expected them to use pause talk. They did use pause talk in the initial statement, and then Jerome Powell, you know, it's kind of speculated that he saw how the market reacted, and he just changed his tone for the press conference, and he pretty much just dumped the market single-handedly there. So market running into some trouble here this week. We did back test that inverse head and shoulders neckline that we've been talking about, and for right now it's holding up, and we did manage to at least hold that level on the weekly close. So the bull case here is that you went up here, you had a 50% retrace of the low. There's your 50% fib, which coincided with that trend line. And now, you could still make a case that this pattern is still valid. It hasn't been negated. You haven't closed below it. So you could still get a move up here. The problem I have, and first of all, before we get into that, a couple of things. So I've been saying that we're probably going to hold up into the election. I didn't think that we would sell off on FOMC. I thought we would bid up a little bit more. But, if you look at some things that are going on right now, there's definitely some games going on. So for instance, we were down big Wednesday and Thursday, obviously, on the FOMC. And you can see the VIX was barely green on Wednesday, and it was actually red on Thursday, and red again Friday as the market did scratch out a gain. But if you take a look here at the VIX, it's pretty much gone straight down since October 13th. Even when there has been sell-off days, it's pretty much just gone straight down. Is this, you tell me. You guys think there's funny business going on? As a matter of fact, I can probably prove that to you. So take a look at this here, these charts, and I'll link them to you if you guys need. But this just shows that the Treasury pumped money into the economy in the beginning of October, and now it is scheduled to run off this week here through the end of the month. So they kind of did a temporary pause of QT. They didn't tell anybody about it. And they did a little bit of QE, a little bit of the old good old sugar for the market. And that's probably your reason for that rally here. And the VIX has been behaving a little strange here. One thing that does kind of explain that is even when the market is red, when you have XLE that's just chugging up every day, and when XLE is green, the VIX is not going to be significantly green. For the VIX to really spike, you need all sectors to be red. So that is one possible explanation. In fact, it's probably a decent explanation, but it's really not enough. And if you ask me right now, we have an election coming up in 2 trading days. We have a CPI number Thursday, and volatility looks cheap to me. Coming down into this trend line here, I usually, when you have an election or an anticipated economic event like the one we have coming up, the CPI, usually volatility is elevated going into that. And then once the news comes out, the hedges come off like they did in last month in October. Now we're selling off into that. That makes me very suspicious here. So definitely some interesting things going on here with volatility. Now, as far as the markets are concerned, yeah, you still have that case, that bull case there, but I think the bear case is just bigger here. There's too much technical damage done. The bulls had every chance to break us above 390 on the FOMC day, and they couldn't do that. We closed the week below the 50 moving average. We closed the week back below 378. On the weekly, that looks like a clear 20 moving average rejection on the weekly as well. So I'm not liking the look the market's giving me here. I want to see the triple Qs leading the market on the way up, and the triple Qs are very close to 52-week lows. I mean, let me ask you guys, how many times have you seen a bull market or at the bottom of a bear market end with the NASDAQ being the worst performing indice? How many times has that ever happened? So you need to see the NASDAQ leading. We're not seeing the NASDAQ leading. We're seeing, the spiders are seeing the Dow lead, and that is not a good sign. So again, I do not like this market here. I think it's in a very weak technical position. If you lose that neckline there on the spiders, I think we're in some pretty big trouble here. As far as the triple Qs is concerned, that 260 level is kind of my line in the sand. And again, just to show that one more time, that goes back to September 2020. That is a major pivot there. So if that is lost, you could see some pretty accelerated selling here moving forward. Anyways, as far as our sectors, let's take a look at SMH here, as we always do. So that was green on Friday. Again, China reopening talk. So the Hang Seng got a really good bid. That helped out the SMH. So the SMH actually had a nice day. And again, VIX getting hit here with the SMH up, as well as XLE. So again, as long as one or more sectors are up, even if the market is down, the broad market is down, it's hard for the VIX to be positive. But either way, SMH getting a nice bid. So were the transports. So again, kind of, a little bit of relief news, bullish news here for those sectors. Outside of them, FANG was pretty weak. IGV Cloud Software was very weak. That is basically at 52-week lows here. So that is flirting with that line in the sand there. And we saw FANG continue to be weak this week. You see Google here, new 52-week lows. Meta, Microsoft, Amazon, Tesla bear flagging on the weekly here. Take a look at that. Not a pattern of strength. So again, tech not showing leadership. Yeah, we got a little bit of relief in the semiconductors this week off of the China news, or at least the rumor anyway. But you want to see tech leading off the bottom, and bottom line is it is not. Another thing that is a problem, which I talk about all the time, but the 2-year yield here. Remember, the Fed has to get the Fed funds rate in line with the 2-year Treasury note yield. And even with the 75 basis point hike that they did on Wednesday, the 2-year finished up 33 basis points on the week. So almost half of the Fed's hike, their so-called aggressive 75 basis point hike, has already been negated just by the price action between Monday and Friday this week. Another thing I want to point to your attention, take a look at the 2-year here. I'm looking on TradingView, and this is actually the 2 and 10 spread, and you have a fake print all the way down to 91 basis points. Now, I haven't really seen this on any other brokers that I know of, but if that actually were to play out, that would be quite something to behold there. But again, yield curves inverted, 2-year still in a downtrend. Even the long bond here, TLT, another 20 moving average rejection here, and that's starting to roll over. So also bonds are telling us that there's further problems out there. HYG, look at this. That's a bear flag there. You can see it clearly on the weekly, below all major moving averages. So bonds telling us the market's not out of the woods, despite what some people out there are saying right now. Anyways, let's shift gears over to home builders. So XHB, again, really kind of just chopping in this range. Again, a weekly bear flag. If this level is broken, XHB has a lot of downside. So we need to keep a close eye on this industry group. There's the ITB as well. You can see the same kind of pattern there. Flipping over to financials. So XLF still holding up really well. And, you can't fight the tape on this. This has a nice pattern here. Bull flag, nice move off the lows. But I can't help but think that eventually, at some point in the future, those yield curves that have been inverted, pretty much across the board here, specifically the 210, that's going to come back to haunt these banks. So for right now, they're holding up well. You got to respect it. Can't fight the tape, but I think at some point in the future, this will be a problem. You see XBD holding up much better there. The broker dealers, doing pretty well here off of all those commissions and selling option premium all year long. Anyways, let's get over to energy here. So crude, nice bid on Friday, again, with the China news. Technically, you do have an inverse head and shoulder that triggered on crude futures. So if that were to play out, that would take you up to that 105, 107 area. This is a nice move here for crude. And you guys remember I said that crude would probably bottom before the election. And that's certainly possible here. We do have a breakout there on that inverse pattern. I still have this kind of feeling, maybe it's just intuition or something. I still feel like they're going to push this thing down one more time. But for right now, I can't find anything wrong with the chart. You had a nice little bullish pattern there develop over the last week, and you got a nice pop on Friday. We'll see what it does here moving forward. I still think that, again, we have a nice little kind of inside bar here on the weekly. I just still think there's a lot of supply up there, and I'm not sure if crude's quite ready to break out just yet. But hey, you got to respect it. It's holding up well, up 5% on Friday. So nice move there. XLE, XOP, OIH, all higher on the week. Again, I'm going to tell you guys, just like I told you in March and April earlier this year, do not chase these up here. These are way too extended and overbought. Let them pull back, let them correct. Don't chase them. You'll get a buying opportunity in the future. You don't want to be one of those people who buys it at the top and then has this happen and you could have bought it down here. So wait for this to come back. I think 260 is a good level there for OIH. XOP, probably the 130, 125 area, and then XLE, I'm looking at 80 to 8250, maybe a little bit lower here, but these do need to come back in a little bit. They are very extended, and this, all these fund managers who were buying NVIDIA and Apple in November last year, they missed the boat on energy, and so what they're doing is they're piling into energy now because it's the only thing that has worked all year long. Every other sector is red. So you're seeing that kind of FOMO happen here, if you ask me. We also have Oxy's earnings the same day as election day, so that will be very interesting here. But overall, my kind of bottom line here is just let them come in. They're extended, they're overbought. Yes, they're great. They're going to be great long term, but don't chase them. You don't want to get a crappy dollar cost average on these. Anyways, nat gas, another pop here. So again, up on Friday with most commodities. A little bit of a pennant pattern there on the daily, and you did fill that gap finally from the 14th. I still think there's a pretty good amount of supply up here. But this had a nice bid at, if it dips a little bit here or has a pullback, I think you can buy that. This should get up to 750, 770, somewhere in that area here, really over the next couple of weeks. But I love that level on nat gas, and I think that bottom is now in there on nat gas futures, but nice little bid there this week. And a continued bid on Friday. I like nat gas on dips here. Let's flip over to uranium. So quickly, we'll cover CCJ again. Really just kind of faded off the highs pretty much all week long, mostly kind of in line with what the spiders did. Again, we got that weekly close that got negated below this trend line. So it's kind of just hanging in there. You do have, the problem for CCJ right now is this wide range red bar with volume. And you close below a wide range green bar doing that. So that is a little bit of a sign of weakness. The good news is the trend is up and it's holding up well. The longer term trend is up and you're consolidating this big move here. So nothing terrible on the bigger time frames, but right now that overarching weekly inside bar is a little bit of a problem moving forward. Same thing with URNM. See that weekly inside bar there. But on the bigger time frame, this is all just digestion. So short to medium term, they may come under a little bit of pressure if those patterns play out, but bigger term, it's just a bigger digestive pattern, much like how we talked about with the potash names, which is going to bring me right over to that right now. Specifically like NTR, they reported, Intrepid reported, market didn't like that. Either way, it's still fine here on the bigger time frame. Again, big move up and just kind of range bound pulling back. It's just digesting the move. I don't really see any issues here. Same thing with Mosaic. This is a really nice pattern here on the monthly. So again, nothing wrong with it. We just had a parabolic move and now you need to digest it. And sometimes that can take time. Sometimes it can be a little bit painful. Intrepid is a little bit on the weaker side as far as the potash names there. I mean, that basically, I think that did make a 52-week low today. So that's erased all of those gains, but certainly Mosaic and Nutrien are holding up perfectly fine on the bigger time frames, and I don't have a problem there. DBC, again, briefly, nice gap and go day on Friday with everything else commodity related. So on the weekly, that continues to digest this big move. And again, huge move, went parabolic. You got to digest. That's really just the way it works here. But I don't see any real problems here with any of these ag names. All right, dollar index. So DXY, pretty good sell-off on Friday again. Same thing, news-driven. You know the story. The thing is, there's still no technical damage. I know everybody wants to look at, how much it was down Friday. Oh, it was a big sell-off, but you're still just inside of this channel here, and that's a bullish channel. Weekly, you still have a bullish inside bar. So there's really no technical damage here above all four major moving averages. Again, you got to respect the dollar here moving forward. And again, if this thing sells off into support, into that 100, into this lower trend line, which would also coincide with this area, right ahead of the election, right ahead of CPI, I'd have to think that, let's just say it would be an interesting setup here, an interesting dynamic to say the least. Anyways, let's get on to the precious metals here. Let's look at gold. up 3.36%. Huge move for gold. Again, same thing, China news, giving these all relief here. I'm not 100% convinced. In fact, I'm not convinced at all that gold is bottomed. I think it does still get another flush here. Doesn't mean it can't move up in the near term, but I do think we got to get that one more flush out. And it's going to be you're going to see people very angry. They're going to hate precious metals. They're going to hate gold. And you're going to hear about gold has failed as an inflation hedge and this and that. And that's when you want to be buying here. But until then, gold holding up nicely. Obviously got a nice bid on Friday. Equal lows here, kind of a triple bottom. You got a bid off of that. The thing that I like about it moving forward for the future is that GDX, look at this, 10% here, and you have higher lows. So that tells you when gold flushes out, it's going to be a major bottom because there is big money accumulating. Why would GDX be outperforming GDXJ? Why would GDXJ be outperforming spot gold? Why would institutions be putting money into it if they didn't think a bottom was close? So just pay attention to that. Miners are leading the metal still. Let's get over to silver. Huge bid here. We swing traded this with SLV in carnivore trades, took some profits on Friday. Big move, up 7.64% on the day. And again, I've been telling you guys I like silver better than gold right now. It's holding up better. Higher lows versus gold, equal lows. Silver is in really good shape. And by the way, have you guys seen the premiums lately? Good Lord. It's $6 over spot for these. My jaw almost hit the floor when I looked at this on Friday. But silver, I think this is poised for a move here. So we do have those higher lows, and that is a power bar there. And again, we're seeing the miners, SILJ kind of confirm the move. Up move, pull back, pop, higher high, up almost 10% on Friday. Big move there for silver. Platinum also getting a nice bid. They should get above 1,000. I like platinum here. And copper up a whopping 8% in one day. I mean, this is, what's the market cap for copper? Like 1 trillion or something. So for that to be up 8% in one day, it's one of the most important metals in the world. And it's up 8% in one day. That is a monster move there. Breaking out of this channel that we've been following really for the last couple of months. And you see on the weekly closing back above that 20-week moving average. So copper in much better shape here. And short term, I can still get up to that 380, 382 area before it gets a little extended. Ultimately, I think it wants to get above $4 here. All right, lastly, let's get over to Bitcoin. So Bitcoin also got a nice little bid here on Friday. Up move, pull back inside bar. And then you got a little bit of a bid off the 20 moving average. Again, short term, this probably gets up to 22.5, 23,000. Ether here in a little bit better shape even. Just kind of consolidating beneath that 200 moving average. I think this can get to 1,800, maybe even a little bit above that if it consolidates a little bit more. So the coins are coming into a little bit of resistance here, but they're holding up well, and we'll respect them here for the time being. All right, just flipping back over here to the spiders again. For me, going into this week, we have an election, we have CPI data, and you have a VIX that's fading. That shows a market that's complacent. And kind of like last month, the VIX was a little overbought going into CPI, so the bears were a little offsides. Now I'm starting to think the bulls here are getting a little offsides, and it's almost like they're just convinced the market's out of the woods here. And I am not. Technical damage has been done below the 50 moving average, 20 moving average rejection on the weekly. So I do not like this market. NASDAQ not leading. Again, red flags are there. 2 years still gaining. So that is a problem moving forward. But for now, we'll just leave it at that. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. And I'll talk to you guys all next week.